Ready or not, it's time to start thinking about income taxes, which is why we invited Jack Emmons, a CPA with Precision Accounting. Welcome, Jack. Thank you for
Nikki.
being here.
It's my pleasure.
I have a feeling you've got a lot to teach me and our viewers today. Lots of major changes to the tax laws this year. Let's first talk about the fact that I would imagine they're confusing the heck out of people, huh?
They're confusing the taxpayer and the IRS.
Really?
Part of the problem is that there were several laws enacted during the year. The last one was on December 17th.
Oh boy.
So, and
that's a little late.
The effective date of these acts are 2010, 2011, 2012, but it's not all the same. Some years, some other years.
Oh, wow. Okay, so let's dive right in. We have a lot of information to cover here. Let's first talk about these tax law changes and specifically the Bush tax cuts.
The Bush tax cuts were actually made in 2001.
Okay.
And they were due to expire at the end of 2010.
Okay.
And what Congress did, for the most part, is go in and extend them for 2 years.
Right, okay.
The tax cuts were cuts in the tax brackets of roughly 8% each bracket.
Sure.
So if you were in the 28% bracket, you were cut to 20% and so on. And those were all to expire, and everybody's taxes would go up January 1st. And so they extended that for 2 years.
Okay, so they've extended that now. You just said that changes were made, though, on December 17th with another extension.
That's part of the extension, yes.
Okay. Oh, boy, this is getting scary to me. Okay, so let's talk a little bit about how we deal with the fact that tax cuts are changing and that there is new law because of these changes, correct?
Correct. And part of the problem is that the IRS is not prepared for these changes. It takes them a while to reprogram their computers. So they've sent out the notice that if you have certain deductions or credits, they won't process your return until mid to late February.
Oh,
so
boy.
A lot of people will be affected by not being able to file till the middle to end of February.
So these are the congressional rate changes?
The rate changes, the tax credits, and whether you take something as a deduction or a credit. We'll go over some of that in more detail.
Okay.
There's a lot of changes.
Yeah, because you can see these rate changes right here. I mean, so this extends lower rates for the taxpayers, right?
Right.
But the new law extends for 2 years, and then what happens is these rates, then what happens to the rates?
The rates at the end of 2012 go back up to what they were at 2001.
Okay.
The capital gains rates are down.
Okay.
The tax on dividends are down from a maximum of 35% to 15%.
Oh, yeah. There you can see. Okay. So now let's talk about who's actually affected by these changes.
Almost everybody, but most of the taxpayers, if you itemize your deductions, which mean if you own your house and take the interest and the charity contributions on, you're going to be affected. You won't be able to file until the mid to late February.
So, for instance, somebody like me, if I wanted to take all my receipts right now, go through them, submit them to you, talk about getting my refund, you're telling me now that it's not going to be even in effect until February?
That's right. Your return will be done by your preparers, probably. They have the same problem. They've got to get their tax software updated for the changes.
Right.
But the IRS won't accept the return if it has Schedule A deductions or certain other deductions until mid to late February.
So, in other words, nobody's getting a refund anytime soon?
Not until March.
Oh, my God. Well, these are the Schedule A items that are actually affected, so let's talk about those.
The state and local tax deduction. If you'll remember, 2 weeks prior to the 2008 election, Congress passed a law that said you can deduct either your state sales tax or state income tax.
Right.
In New Mexico, that doesn't affect us much. In New Mexico, state income tax is usually higher.
Okay.
But things like Florida, Nevada, that does not have a state income tax.
That's right. I lived in Florida.
All those returns.
Oh, boy.
That was to expire at the end of 2010, and they've extended it 2 more years.
Okay.
Another problem with that is the IRS puts out a table that says if you make so much money, you get so much sales tax deduction.
Right, exactly.
Those tables have to be updated and disseminated before you can do your return.
Oh, wow. Okay, so now what about these educator expenses?
On Schedule A, you could deduct educator expenses, but it was subject to a 2% reduction of your income. So most people didn't get any benefit out of it, most teachers. So they moved that over to the front page. You could deduct $250 and deduct it all. That expired at the end of 2010. The new law reinstates that so that you can, for 2010, deduct $250 of the educator expenses.
So you can. So that's okay. Well, that's good. Okay, and what about the mortgage insurance?
Mortgage insurance premiums our insurance premiums required when you owe more than 80% of your loan.
Okay.
So Congress said up until 2010, well, because you have to have this insurance, we'll let you deduct that as part of your interest cost.
Okay.
That expired at the end of 2010. Oh. Congress reinstated it. So now for 2010, you can deduct mortgage insurance premiums.
Okay, good. Well, at least that's good to know.
But the IRS computers weren't set up to allow that, so now they've.
So this is the ongoing problem, I guess, in each area. Now, what does this mean for the upcoming year then? For next year, is this going to be really even more effective and problematic?
Some of these extensions, most extensions go through 2012.
Oh, okay.
Some go through 2011.
Okay, so these deductions are all going to be affected into 2012?
Most of them into 2012.
Wow. So would you just recommend, so what would you recommend to people who are really needing this? I mean, because things like the IRA to charity deduction, a higher education tuition, alternative minimum tax, I mean, what is this going to mean for these people who aren't going to see these kind of deductions?
Well, the IRA to charity deduction is a special rule for people 70 and a half that have to take out part of their retirement.
Okay.
You have to take a minimum distribution every year.
Right, right.
The IRS has said if you'll take that distribution and give it directly to a charity, you give it directly to a charity, you won't pay tax on it.
Oh.
But that's only for people that over 70 and a half who give it directly to a charity.
And that's it. So everybody else. So now what does that mean for somebody like me? If I donated something to charity, you're saying it's no longer...
You still have the same deduction that everybody else has. This was a special deduction.
Okay, so that's just a special one. All right. So now what do you recommend to people then who are really just lost?
Well, I would say get everything together that you can.
Okay.
Watch there's been newspaper articles.
Sure.
I'm sure there'll be other articles in the magazines.
Okay.
Get everything together you can and let your practitioner say, yes, you can take this, no, you can't.
Okay.
Because that's what's going to be complicated, is there are a lot of changes and a lot of different effective dates.
Okay, I want to see those there we go, the credits that are affected, because the child tax credit, home energy upgrade credit, and the college tuition credit, those are all significant credits that people are concerned about.
Prior to 2001, the child tax credit was $500 for every child you had under a certain age. Well, I went up to $1,000.
Oh.
At the end of 2010, it went back to $500. But Congress extended that for 2 years. So the child tax credit is still $1,000.
$1,000. Okay, good. So it's not down to $500 then. So that's good. At least there's a little bit of hope.
Yeah. Let me go back to the home energy credit.
Okay.
Everybody thinks that they can get 30% of new windows or new energy saving.
And a lot of people are holding off because they think they're going to get more. So now, tell us, because this is not good news.
No, I'm going to give you a surprise here. Yes, it is 30% of those energy expenditures.
Okay.
Up to $500.
Up to $500.
So if you spend $10,000, you're going to get a $500 credit.
Okay. Well, what about? Well, the other one that I was also listening to was unemployment. Unemployment compensation. So what's happening with that now?
Unemployment was exempt of the first $2,400. Mm-hmm. It is now 100% taxable.
Unbelievable.
So people who are unemployed, drawing unemployment, have no withholding taken out, are going to owe some taxes on it.
So all these people who had a little bit of hope, the hope got taken away. But I think we can give them a little bit of hope into the new year. I mean, I think that there will be opportunity for people to get some reimbursements this year.
There will be. College credits is another area that you can either get a 20% of the tuition credit through the American Opportunity Act.
Fabulous.
Or you can deduct it as a deduction.
Well, Jack, thank you so much. This is very beneficial to our viewers and for me as well. And we wish you a lot of luck in 2011. And hopefully you head to your professional CPA for the latest information on how to do your taxes just right. That's the way to do it.